Greetings, market rebels. Welcome to this week's macro measure for the week of January 8th, 2023. I'm Wayne. My partner Ryan's working on the market outlook that will be coming out later today for everyone. It's about an hour, I think, in front of noon here on the East Coast. So let's get started. And I don't do a big review of last week, and I really won't be doing that again. But what I wanted to note while we go through the disclaimer, et cetera, is just that we were undecided again. We really were not sure where we should be leaning. We were really more in a wait and see, let's see what the market does mode. There's our trusty disclaimer. Here's our trusty intellectual property rights notice. And we really got another taste of that even through Friday, which was a very strong day, which we'll talk about. So again, not forcing anything, kind of trading within the range, looking for singles and doubles when we can find them in Rebel Pit, so on and so forth. Seemed like the way to go. So let's shift away from that and let's shift to, we need to shift to another screen if I can let it get it to cooperate with me here. I've got a lot to talk about in my mind, and let's get started. So kind of strange, but I'm going to start out with a couple of charts that are not the SPY, and there's a lot to show here, but I just wanted to flash this for everyone because this is just my sector grid of the S&P sectors, all those ETFs, and maybe they're not perfect, right? Maybe there's something a little bit more suitable, but I just stuck with these because I figured they'd always kind of be around and be handled properly and so on and so forth over the years. But you can see if we go through them just quickly, not even all of them, but just take a look at the percent change and the kind of moves. It's pretty much a green risk on everywhere, everywhere you look. And there's even other ones too. One of those, of course, would be the SMH. And I will talk a little bit more about this stuff in sector situation that I'll record pretty much right after this. But looking at just the short term here, everyone that's done a little chart work and has probably heard of the cup and handle, and you've got something akin to one that seems to have formed, and it's on the cusp of shooting back up. And that's very interesting, right? Because I would have said, looking at the SPY on Thursday, I was concerned with the way that it closed out. I was concerned that with the poor action we saw, the attempts to rally that failed on Tuesday, Wednesday, and Thursday of last week. And here we are at the SPYs. Let's get this magnified better. And there you go. Tuesday kind of started out with a little bit of a thud. Wednesday and then Thursday, you got one of your lowest closes of the week. And I thought, well, if the way that expiration set up, maybe that could start tripping things off. As they say, dealers would have to start hedging if things broke down, that the deltas would grow on those near-term options. That would create even more hedging and so on and so forth. You get the idea. But that never even really had a chance to happen. You can see what happened here. I thought last week was very interesting in the fact that I mentioned this in, I think, Rebel Pit during the week, and I think I may have mentioned this on Cocktail Hour, but I was expecting the market to trade at least a little bit lower and maybe test these low areas, right? These couple of low areas, and it just didn't. I thought the news that had come out earlier in the week, it kind of struck me that the market was not really acting well, but it wasn't falling apart either. And it started, I think I even put something in maybe on Thursday that my spidey sense was starting to tingle a little bit because that was just a real change. And that kind of told me that, hey, things are not falling. And if you look at this in the SPY, we've talked about this sort of inverted compound head and shoulders-ish type formation that failed to fire, fell off dramatically, because when patterns do fail to fire, that can start to happen. But you've got to give the bulls credit that through all this sort of listlessness, a lot of the technicals have really improved in a very quiet, sort of under the surface way. And that's why I was referring to the operators as sneaky bastages. It's from an old 80s movie. We always kid around about it in Rebel Pit. But just in a very, very like nice deft touch sleight of hand maneuver, suddenly, right, everything's looking a lot better. And we don't know if this was just enhanced by expiration day, mostly because of expiration day. It could be, I can't say, but if you just look at it objectively, I think you have to look at this kind of mild pullback from the major resistance line we've been working with for so long and say, look, they held things in check. And now they're poised to maybe do something with it. I really do think they're poised to at least attempt to do something with it. So for the first time in probably 3 to 4 weeks, I'm leaning more towards thinking they're going to try to break this thing out and take this thing up. And you would test the 200 there in purple. And ultimately, the next test would be this level up here. Let's call it near 405-ish for now in the SPY. And there's other flat lines like 410 for sure that are a big deal, I think. But I'm just saying that the next this resistance line would be about 405. And so that's how things look. Now, I don't know, I don't know all the over the weekend news yet. I don't know what happens later today. I don't know how Asia opens, Europe opens. I don't know what breaks in the morning, of course. But as of right now, I've got to say that this is definitely more constructive, I think, than it has been. And what I did notice, why I was flashing those sectors as well, let me try to get those back if I can. Where did I leave those? There they are. Oops. Nope. Let's get this over here. These sectors, and I'll go into this more on sector situation, but a lot of these sectors not only had a really good day, but the complexion is on the verge of changing to at least a more bullish run over the next week or so. They're poised, I think, if they can break out a little bit of follow through to do that. And remember, there's a lot of information coming out this week. We're on the cusp of earnings, and anytime earnings are poor, in my experience, the FinTV commentators will say, well, that's backward looking. It doesn't really matter that earnings are poor. Everyone knows that. But they'll use potentially surprising earnings that so-called beat to justify a big market pop as if it's relevant, right? Not really forward looking. That's the little flip that they do, in my opinion. So just keep an eye on that. Now, what I want to do is sort of just back up. We'll come back to the SPY chart. We'll chart a few other things, but let's get that out of my way there. But let's see, where are we on my, I've got a whole thing set up here that I wanted to show before we really get into the charts to kind of like set the table a little bit. But I did discuss this in Rebel Pip. I did discuss this a little bit in Cocktail Hour, just a brief mention. And Brian McCormick, who referred to as BMC, I thought he did a really nice job on Cocktail Hour to lead off Cocktail Hour. A lot of things, he was noticing a lot of the same things that I was throughout the week. We usually are pretty close, I think, the way we both look at things. So I thought he did a really good job. He always does, but I really thought it was a lot of really good salient points. But one thing I shared was just that I think something is definitely brewing in terms of the next big move that they're either preparing for or hedging for. And you can see most of these hits in UOA, that there's been quite a few over the last 2 weeks, and they're very significant in terms of size. They're very big, and there's maybe some hedging going on, maybe some positioning, whatever the case may be. But this is not normal that you see this kind of flurry that just keeps intact for this long and to this degree with these sizes. Yeah, there's spreads mixed in here. There's all kinds of things going on in here. But the point is that there's a lot of activity, and there's also there's been a decent amount of activity that's been heavier than usual in the SPY ETF as well, which we should see right here. So you can see the last week or so, there's been some pretty sizable hits that have appeared in there. Now, it hasn't been so much in the diamonds, it rarely is. QQQs are sometimes a big part of this, but they're not, as of now. I haven't seen very much in there, but spiders and IWM. And if you go back to the view that we were just looking at, that's telling me that they're expecting, and I noted this during the week, they're expecting something significant, I think, to start to unfold one way or the other, that they're doing this now. They're not normally, months and months early with UOA in the index ETFs. Usually when that starts to pile up, not too long thereafter do we start to get something out of it. So that's where we are. And a lot, again, just noting it, I will go through this a little bit more in sector situation, but the bottom line is that the bulls are very close to getting a much firmer grip on the market and on many sectors and on many stocks than they have been in a while, in my opinion. So if they can get a good move and hold it, right, that could really be a big technical swing. And I have a few things I wanted to share with respect to that, starting here with this tab. I just want you to notice that this is a pre-election year that we're in, 2023. 2024 will be the presidential election year. And you can see the green is what we're looking at here. And look at the green performance, right, versus the other year. So year 3 of a presidential cycle, historically, at least since 49, as we're seeing here from Stock Traders Almanac, this tends to be the best year, right? And it's the same thing in NASDAQ. Now, it's a different story. I think NASDAQ, a lot of folks are forecasting that NASDAQ has a rough year, and I can understand why, but I think I could show at the end of, probably towards the end of today's video in macro measure, that a lot of those big names have become oversold, and I think they've had significant declines, which sets them up, puts them on the table, I think, potentially for very strong rebound trades. I don't know if they fix their downtrends. I can't say that, it's too far out, but I do think the potential for rebound trades is there because of how beaten down some of those names became. So we're not zombies when it comes to seasonality, but we like to keep an eye on it. It's not like we bet on it all the time, but just remember, this is the strongest year. So if we're betting against the market, it would be really atypical, right, to win if you look at past data of the third year. Just as we've noticed that there's very few back-to-back super ugly years in the stock market. I think Market Rebellion tweeted that a few weeks ago, or at least a week plus ago. So you might want to check that out on Twitter. But there's definitely years that get strung together in series that are ugly. Of course, the Great Depression, post-tech bubble come to mind. I'm sure there's a few others too, but a lot of times when you have a rough year like we did, they do try to snap back, and that's set to happen according to seasonality of the presidential cycle. And if we look at it a little bit further, this is from Ed Yardeni, his research, and he's become, I think, a little bit too much of a defender of things at times. Unfortunately, I used to really like what he had to say. He's still really, I'm sure, a bright guy, but it's a little bit too blue skies forever, if you ask me, out of him lately over the last several years. But this is the third year. Now let's take a look at the first year, right, for the presidential terms. The average return of the S&P is 6.7%. Second year is 4.3%, and the 13.5 for the third year is even greater than the 7.4 in the fourth year. So this is, again, historically, not only does the market do well, but it definitely does best presidential cycle wise in terms of the third year. It does best in the year we're in now. So when you add in the fact that last year was such a beaten down year, right, such a rough year, then there's that trampoline effect that things could A, spring back, and then B, if it takes its natural course, it could really go significantly. Now, I'm not forecasting that. I just like to look at things and look at the probabilities, right, and past tendencies and things like that to be prepared for them. And I don't, in terms of economics, I don't think that makes a lot of sense to me. But again, the market doesn't have to make sense, and we are typically trading in the short, nearer term. And so I would still trade the action in front of me, but I like to be prepared. And here's the LEI, right? So this is a leading economic indicator. It's supposed to be forward looking. And you can see that this is rolling over. Now, this isn't the most recent data. This is about a month old at this point. But you do tend to see, if you take a look through this, you can go check that out. you do tend to see that this is not flashing anything really great about the economy. So again, I think the economy is still really under pressure. I think the market is trying to act as though the Fed's done, and it very well may be. Let's see if we can just take a quick look at that Fed watch tool. And we'll get that going really quickly here. And I think that the probabilities for the Fed to do something have really dropped a lot. So the current target rate's 425 to 450. They're thinking there's a little bit of a mild bump, and maybe there's a 24% chance that we go up a little bit more from there. But overall, it seems like they think things are overall, the probabilities are that things stall out. They don't go much higher. So a lot of these folks seem to be anticipating that the cycle is nearing its end. I'm going to get in and get these cheap, great bargains now. And they may turn out to be right. One thing I would add is that in my career, especially early on, I saw, I think, plenty of things that were dubious at best, just all kinds of ridiculous moves in front of things. And at the time, they really did appear to be based on nothing, just pure shenanigans, as I call it. But once things really do continue to change and move back up, should that happen, it can really take on a life of its own, and the psychology can really flip around and bring more people, right? You kind of get that greed coming back where people are like, oh, I don't want to miss out. I didn't buy enough when the market was discounted. So that's why this game can be so hard, is that you may be calling BS on something macro wise, big picture wise, in terms of it being more of an investor mindset. You may be right that there's a lot of BS that's built into the recent move, let's say over the course of weeks or a few months. You might be completely right about that. But if things do turn out to be maybe not as bad economically speaking in some ways, or they massage statistics like so many do, and they massage earnings reports like so many do, they can keep these things moving really against, I would say, real reality, right, for quite a long time. And that's why I found that just embracing the price action and the technicals is the thing that lies to me the least, right? And of course, you've got to always be prepared that you're being lied to even by technicals and be ready to reverse. But that's just discipline, and that's just what experienced traders do. But let's get back to where we are on this week that's upcoming. And you can see, right away that we've got Atlanta Fed, we've got inflation expectations, we've got Powell on Tuesday. We've got a lot of stuff, of course, happening Thursday, including CPI. You've got Michigan consumer sentiment and inflation expectations. So there's a lot coming out that could definitely move markets, and we have earnings. So remember, I've always made the argument that in my experience in the markets, all it really takes is the drop of a hat, a mild breeze for bulls to start buying all over again. That's just, I think, been the nature of the beast in my time in the markets. And it's kind of like buy first, and ask questions later. That's just the way they operate. And so you just can't get caught off guard by that. I think if you keep that in your mind, that any excuse to start buying stocks or lifting stock prices back up, the gang is going to seize upon that. And if they don't, that should be a tell. If the gang has theoretically really great news and they're failing to really put a rally together off of it, that should be a tell to you that, maybe the rally already happened, or maybe there's a bull trap or something. Now that's what we could be setting up for. So let's get back to the charts, and then we'll come back to some of these major big mega cap companies that we like to look at towards the end. But it's right now, given what's happened with sentiment too, let me flash that quickly. But a lot of things that I chart, and this isn't all of them, but these are just some, this is just some of them. But you can see that the sentiment, or I should say market breadth, really, market breadth indicators are definitely supporting this consolidation and have improved during this consolidation that we're looking at. So that's not be all end all. I don't want anyone to think that's be all end all. It's not be all end all in my book. It's just that this isn't pure this maybe being on the brink of breaking out. Remember, right now SPY closed at the 100, which is that dashed white gray line that I'm mousing over. And then now we're really close on the high to the gold, which is the 50. And then the 150 is pretty much right there with it, leaving only the 200. So there's a little gap in here that you can see. There's a nice little confluence area up here, right, for them to make, and there's a flat line just below there, in my opinion. So yeah, I think this is what makes sense if they're able to bust this stuff through. Not really a big deal though, right? I mean, if we were to get up towards that 396, 398, a little 2% move is not much, the way that the spiders can chug when the bulls are on the march. And they even had a pretty solid volume day. Now, I've been reading that it's been tough because there's been a lot of these very short-term options that people think are influencing the markets, which again, if they're sizable open interest, that could be the case. Unfortunately, I don't have the time or the data or research or anything in front of me to be able to say, yeah, that's what's been influencing things. But out of all the days we've seen in this consolidation, this is definitely the most impressive. It just happened to be on expiration day, the first Friday, right, expiration in 2023. But as I zoom out, if you will, right, or I go out and we get a little bit bigger picture view, I refer to this as a base camp. So one thing I've learned that I think is important, at least, is that if you're in sort of a pattern, in this case, it was sort of this expanding channel that we seem to have been in for so long. The fact that this didn't back off any further and even come so far and come down here and start thinking about retesting these areas, these lows, and held at a much higher level, and that level happens to be very close to the 200 in purple and the resistance line that's been critical for the past year. This is a much shorter scamper to try to push through and break out than if you start, let's say, all the way down here, work your way up to resistance from all the way down here, and you spend a lot of energy to do that. So base camping kind of in a sneaky way that's close to these declining A line and B SMA in the form of the 200, that puts you really much closer that if you start putting a burst together, you could break out more easily because you didn't have to expend, right, nearly 6 weeks or 7 weeks of energy, maybe even 8 weeks in this case, to get from the lower levels down here, which would happen to be a fib, the 50%, near the 50% fib for the SPYs for the whole move from the COVID low to the post-COVID high. But that's why I look at this as I'm not going to shake this off and kind of dismiss it. I think when I looked at the market, things were just getting better and better on an objective technical basis. Now, could this definitely be a bull trap in the end? I think it could. I mean, there's no doubt. I don't think the economy has shown us its worst face yet. I think there's going to be a lot more negative fallout in this economy. But right, bulls would tell you that's okay. The market's already factoring that in because that's what they always say. And the market's forward looking. It's discounting, really bad things. But look, the reality is, and I don't know what's going on exactly, but the reality is that they're buying, they seem to be buying European stocks right now. Europe to me is always, because of the history, and to me, Europe isn't really go-go market for me. Like, I feel like there's so much weight on those companies for various reasons that it's hard for them to really fire the way that a lot of American companies do, just having lived there. But they've got Germany, moving up strongly. They had, I think they had we'll go through it quickly, but there's this is a major ETF that a lot of folks follow. The emerging markets, we've had some bullish UOA. in there. I put an idea out on the bull side there because that's, I think, on the cusp of trying to fire potentially higher. And then FXI. Well, I put some ideas in for UA Pro recently that were bullish, that were China names. Fortunately, and we even have another one in there that really hasn't taken off yet. I think it just overextended, but we've had BABA, a couple others, but I regret not putting more. Just that a lot of people do not like to trade China names because of the hyper manipulation that's more apparent than manipulation in other countries. We'll just leave it at that. But this has been a great area, and I think IQ was one of them. The little one that comes to mind that was a little near somewhere between 350 and 4 when we saw some really nice EOA, and they went haywire in that one, and BABA and a couple others. But the bottom line is that there's apparently money flowing into stocks globally and maybe now domestically. And it seems, and it's just curious to me, because I would have thought, being able to get, if you think inflation's going down, and being able to get the kind of yields that you can get, and the fact that the economies really are not in a great position, it doesn't seem, economically speaking, that bonds would start to get a better bid than they have to this point. But especially if you think that if you think that yields are apparently about to stop going higher, whatever. But none of that's happening. In fact, if we look at the dollar, for example, we've been charting this stuff for a while. Dollar didn't threaten to start finally moving higher a little bit, but you can see that it failed and reversed hard. So that was kind of an ugly finish to the dollar there. TNX, the 10-year yield, it was a little maybe in front of the dollar, but it tried to start moving back up. I know this is really just a derivative, but you get the idea. It's hard to change the nomenclature when you check this out. But that doesn't look good at the moment, right? That it's starting to fall off dramatically. And then the VIX was threatening to do a little something, it seemed, and the VIX, of course, had a really rough day, and it seems to be potentially on the way back down. So the way that the week ended, there's just no way, in my mind, if you're trying to be objective, to say that it didn't take a nice turn for bulls as it concluded, and that they're primed to maybe do something. Of course, the follow through is the big part, right? Do we get the follow through? But I think if you do get follow through, I think you're so close to the 200, you're so close to this this trend line, this resistance line, that it would make sense to try to push through there. Usually they don't get that close to things that are, if they can break it, that is. So just keep in mind the 150 and 50 are right there. So I would put those on your chart if you don't have them. 390-ish is big anyway. It's got to get through there to start thinking about mid 390s and then beyond. So that's the way things look. And I think it's the bulls are certainly not out of the woods. I don't want to make it seem that way, but I do think that we're on the cusp of something, a significant move. And all you have to do is really look at Thursday and how it was a poor day, and how it seemed like we were destined for possibly testing things, because things kind of were 3 days of rally attempts failed, right, to start the year. Not a good look. And then suddenly this is what they do. This is why you have, in my mind, you've got to be so open-minded as a short-term trader, right? To say, look, these SOBs are not letting this thing fall. These SOBs are not reacting negatively to what would apparently be pretty stern Fed speak and other news that should seemingly at least cause there to be more pressure, let alone a potential breakdown. That didn't happen. And that to me is a telling sign. And that's what I said. I noted earlier in Rebel Pit at the time, or some point thereafter. But there you go. I mean, it's just the way that these guys handled this Friday. I've got to say, and I just did the review, and I'm like, boy, they really are very close to asserting further control over the market as bulls. It's kind of been more mixed, and that makes a lot of sense, right? If we have this consolidation as we did, it was tough to call. We were kept saying I can make an argument this way, I can make an argument that way. So bull versus bear, and it's kind of an even standoff. And it was mixed, but I do think it started to tilt more in favor of the bulls. Just the way that all the sectors reacted, a lot of the breadth continues to improve. These European markets, the Asian markets are doing better, so on and so forth. So it is what it is. It may not make a lot of sense to some of us, but it is what it is. Now, we'll take a look at the Qs. You can see that IWM is pretty similar to SPY. This is similar as well. Big reversal, right? And big up close there. And I think you can see that the Qs had this stronger volume. It finally perked up there a little bit. Not incredible, but it's definitely looking better than it was. But you do have to get through the 20 in blue. You've got to get through the 50 in gold, and then you've got to get up to this 100. So you can see just with the nature of things and all these other flat lines like Ryan would have near 281-ish or something, things like that will be in its way. But you know, when they get these big names that are in the Qs rumbling to the upside, it can become a pretty powerful move that sustains. And you do have, one other thing we can note, and we did note this during the week for different traders and different services, but just note, right, the similar low here, this low to this low, and then note the positive RSI divergence on that. So the bulls do have an opportunity here, I think, right? Even in the Qs, which have been probably one of the, probably out of the 4 major index ETF that we track, so folks can potentially trade them instead of the cash. That probably has looked the worst, but it looks better. And the diamonds, which were pretty standout, they've had a nice little correction. They pulled back. They held the 200 here in purple. The 100 and 150 or below, back above the 50 in gold, back above all the shorties, the 10 in white, the red and 15, and the 20 there in light blue. And if we extend our line out a little further, which we will, something like that will be fine, I think. But you get the idea that this is not out of the woods yet, just like everything else is not out of the woods, but it's working its way back up towards a level that we would, I'm just crudely drawing those, but if this can get through here, right, this resistance, then you can see there's really not a lot in its way above there. And there really isn't. And if they do string another leg together, right, this would be a nice, really strong move up, nice little pullback here. And then they might try to resume this, and then you have to see if it can break it out. And then you have to see if it can hold it. Then you have to be concerned it doesn't get beyond the Bollinger Bands. But this all goes back to just having a window to look through every day, a consistent technical window that you look through. And I use all these things to help me in so many ways, but one way is through position management, right? If I see the market continue to act well, a lot of stocks are acting well, big mega caps are acting well, industrials are acting well, basically, right, your Dow blue chips are acting well. If everything keeps acting well as a package and it seems like it's risk on, I'm going to be more of a lazy roller, right? Let things work for me. And then I'm going to lazily roll up. But if I see a massive quick burst that seems like it got ahead of itself, I'm going to be a more aggressive roller. At the very least, probably an over roller in that case, right? If I get extended beyond these levels way up here, I'm going to over roll, right? That's what I'm going to do, because I know that it could keep going, and I don't want to give up on something that's got momentum behind it. But at the same time, I don't want to overstay my welcome and get clipped with heavy delta. I'd rather catch that final part, or that next aged part of the move. I'd rather catch that in a different way with lower delta, lower risk, and still play the game. But in options, we have to be grateful for the fact that options allow us to do that, and stock does not, because if you have to trim your position, in stock, you have lost delta. Whereas with holding contracts, you can control the same number of shares, just at a different strike level, that with a different delta, and continue to participate, really still with the full control ultimately over the number of shares that you desire. So let's take a look at some of these big names that we do to wrap things up. And this is what I'm getting at, right? This is a Bollinger Band excursion. These Bollinger Bands are fairly wide here. They're not narrow like they were back in here. And so I pay more attention to a Bollinger Band excursion and that it could be meaningful when the bands are fairly wide. That tells me that it's been probably more stretched than is typically the case to the downside. Big important name. So you just can't be shocked. The RSI, it continues to get a little bit better, a little bit better. And in fact, look at that RSI burst. And I've often told folks when it comes to RSI, it can think of it like almost like a line chart of the stock price in some ways. And that once it breaks out, it can often be a leading indicator of what's about to come. And so that is not a lock, nothing ever is, but that certainly looks a lot better than it has. And it's very close to getting through a flat line. And I think clearly, right, getting to that 20-day would be not really anything special. That certainly could be done easily. And then you have other flat lines that are a little bit higher here in Apple, up towards your 134 and change, but probably getting back to the 50 is the big deal. Now, if we flip over, and I don't have it on this chart, so I don't want to get this too crazy with all my other charts, but I was just going to try to take a look at the weekly chart for Apple, and maybe I better pull this out of the way. I don't want to get this all confused, so bear with me. Oh, forget it. It's fighting with me. I was just trying to take a look at the weekly, but Apple's got a decent weekly. And so if they do spend a lot of that weekly ATR moving the stock up, certainly Apple could move up significantly. And that would clearly, right, we know that's the biggest weight. So that would help the major indexes out a lot, because they've been able to do what they've been able to do so far by holding the market and then starting to move it up on Friday and improving sectors without help from Apple and Microsoft to a large extent. Here's Microsoft, right? And that got down to on the lows, right? The RSI, I was watching it at some point. It was very close to being technically oversold below 30. Can't remember where it was, but certainly this is not in good. This is certainly in control of bears. I don't want to make it as if it's not, but there's an attempt there, right, to start reversing it. So it doesn't look as good as Apple, I don't think technically, but hey, they might come after everything. We'll see. But these things have gotten worked down pretty consistently. And you could see just how far Google got worked down. I mean, it was almost halved. Let's see if I can get a little more. Let's see, where was Google's highest high? Yeah. So there it is right there. So not quite halved, but almost halved. And you could see that this low, a little bit higher than that low, but the RSI is much higher here. So that's for folks that like a little bit of positive divergence. Bears are definitely still in control of this thing completely, but you can't rule out these little relief rallies. This didn't get all the way down like other stocks, but that is, you can see that recent candle, I think, Friday's candle definitely in Google and Microsoft kind of flashing a little bit of reversal based off of the one candle. So they're not completely dead in the water or dormant or no-goes. They might put a little something together if that candle is showing us real promise. I think you could see that this looks a little bit better in Amazon with a better RSI on this low, which is probably just a little bit lower than that low. So again, a little positive divergence there. And you get above that 20-day there in light blue. And you get, of course, I always note this, you've got flat lines, of course, to fight through, but the next big SMA is a little ways away. So might be a good one to keep on your radar there if they do try to fulfill the promise of some of these bullish things that have been flashing. BRK-B, we'll do this one. I don't want to belabor this too much. I might jump around and show a few. BRKB. And we talked about how this was faring better, we thought technically, and you could see that that closed near high. So once again, right, a strong stock was able in a market that ultimately was strong at the end of the week, a strong stock was able to do better, which is, often the case unless you get that reversal trade kicking in big. Visa. Now, I mentioned Visa in Rebel Pit, and I'm kidding around with Greg McDermott, my partner, but Greg's the man in Rebel Pit. He takes care of Rebel Pit all day long with ideas, and I'm going to have a talk with him about not adding my little my little favorites, which were MA and V, if the market did bust up, because they both really had a good finish. But you can't hate that, right? I don't think you can hate those technicals, other than the fact that they're approaching maybe a little bit closer to overbought. But these were two that I really liked midweek. And Greg did put some financials in, so I'm only kidding. I think he might have had GS in there. I can't remember what else he put in, to be honest, but there were a couple of financials that I think he put in. But yeah, I really, I wish I could have had the time to add those officially myself. I don't get a lot of time to add things in Rebel Pit, unfortunately, because I'm busy really with the UOA so much all day long, every day practically, and other things. But Exxon, this has been squirrely. You gotta like the fact that you're above all the SMAs again, but not really a good close, right, with that kind of hammer that we left there. So that's a little interesting. You're still in this consolidation, but you're closer to breaking back out and up now. So I guess we have to give them the nod overall that it was a pretty good week after getting hit. But this, again, another reminder of how quickly you need to have your head on the swivel and be able to pivot and not really become hostage to your forecast, and be willing to be open-minded. And if you want to make money, reverse with the momentum. Walmart, I know Greg had this one and in Rebel Pit, and that had a nice move there. So I don't know when he added that, but it definitely had a nice, for Walmart, going up this much is a nice move, and he caught that from a better level, so that's good. That's above everything now too. That's a big one, obviously, and sign of the state of the consumer. Some consumers, at least, that shop at Walmart. Let's take a look at NVIDIA and Tesla. We have to call it a day after that, because we can't go for forever. But yeah, I mean, I think NVIDIA, that the semis are looking better. You would think this big dog, the semis, would want that, of course, to help them to try to fulfill some of maybe their bullish pattern destiny, at least try to challenge this 200 and maybe go from there. NVIDIA's being a little crafty right now, right? That's kind of showing you that, hey, it worked its way past resistance, but it's still trapped really in that range bound, and the consolidation is just still there. So I think you've got to wait. What I would probably do on this, again, judging it, if the market's working overall, I think you probably have to use Friday's high and keep it on a short leash, right? We know that, especially if you get in early on Monday, if the market's mildly positive, that I would keep it on a short leash for now. But you got to I think, the fact that it's on the verge of taking out that resistance line that we're mousing over right there near the highs, and it will maybe have a dogfight on its hand. But to get through some of these SMAs, like the 15, like the 150, like the 50 in gold, like the light blue 20, it's got a lot there waiting for it. But the big payoff will be, naturally, if the market momentum, if they get this market rallying, the momentum intensifies, that'll be the big burst area, probably, to get it back towards the 200, if that scenario begins to unfold in the market. Which, again, I don't like to make these table pounding proclamations. I'd rather try to frame things and just objectively, and then go from there, because the market teaches you almost every day, if not every other day, that you really have to be a flexible person that's going to take what comes your way and make the most out of it, as opposed to, now, if you're trading longer term, you have to be super patient, and you have to deal with the adverse movement and just live through it sometimes. But in the short run, it's, I think it's a different game that you're playing. But this is clear here in Tesla. Now, granted, right, this got super beaten down. Like, even at that major reversal close right there, you can see the RSI closed just barely above 30 there. So, think about where it was when it was down here, if it would have closed down there. Major reversal. Greg caught that Tesla burst trade in Rebel Pit, which was good. So good job by Greg on that one. Earnings coming up. Right, this looks ready to try to take out the 10 there. And again, in a buoyant market, I would think it tries to work its way through the 10 and up to this resistance line, which happens to be the 15 SMA in red, basically 126. So there's definitely, and I think you have a flat line there as well. I think you can see the highs, the close. There's a little mini flat line sort of forming there, right around there at 125-ish, 124, 126, whatever. But bottom line is, yeah, if they busted through in a strong market, being how wide these Bollinger Bands became relative to any other time. I mean, if we go back, you've got to really work hard to find another time where the Bollingers were this wide. And that probably comes back to somewhere in here. And when you get extended, right, you tend to revert back inside the bands. And that's what I'm getting at, that again, just a little pop potential is there, which would be a nice pop, really, but it's there based on the technicals. Now, of course, I have no idea if they're going to follow through and take advantage of it. And I do think bears are completely, at this moment, in control. But I do think short-term bears may retreat for a little while if the market goes Tesla fires, and you could see a nice little relief rally. And remember, we're not describing anything out of the ordinary. Here's a relief rally, right? Here's a relief rally. That's what we're looking for, something like that to probably at least work up towards the 20 if that relief rally scenario unfolds. If it gets legs and powers beyond, then I would start looking at that resistance level up there, bring that line down and work with that. And I'll bet at some point something else will probably, depending on how fast that could or does, maybe will happen. We'd have to look at other different things like the fibs and other things maybe from the past, look for other structural price action that was somewhere near there. But had a really long macro measure here this week, but I felt like it was worth the time to try to do this because so many things are up in the air in terms of news expectations, earnings coming out, all the stuff we looked at in our browser there. Well, that moved. I moved it. That's why it moved. But remember, there's a lot coming out here. There's a lot of stuff to consider when it comes to this year. And notice, right, that if this year does play out like a pre-election year, the market gets off to a pretty good start in January that generally continues for a while. So there you have it. If that starts to play out, that seasonality starts to play out the way it typically does, the gang may be able to shake off a lot of the concerns that a lot of us have for a while. I wouldn't be surprised. That's really what the gang likes to do anyway. And then they'll always deal with the problematic issues down the road rather than now. That's just the denial factor, I guess, at work. But got to give them their due. Naturally, right, if this was all kind of expiration related, I don't think it was, but maybe it was very heavily influenced by it. And you start reversing back down, then you kind of know that this is the danger zone below 380, certainly below, say, 375-ish. But as of right now, I'm prepared. I'm more prepared in thinking that there's more that this upcoming week favors a rally attempt, and you've got to wait and see what Powell says, what Bostic says, what the University of Michigan says, what CPI says. There's a lot of things here that could flip things around. So don't go to sleep on risk really ever, but certainly don't do it this week. And I want to thank everybody for tuning in. I hope that you got something worthwhile out of today's video that you can use hopefully this week or in the future. Thank you.